doubt it for some reason. And I think that that's going to be our challenge, that we can talk of a Cape Town property market, the opportunities in this market, but I think increasingly we all talk of ESG, environment, social and governance, and I think that in South Africa, S must come before E. Because if we don't achieve that, we will have shopping centers with solar panels that will be burnt down. We have to get the S right in this country. And I think that's going to be a challenge that we're going to face, and I think it's going to be a challenge for the property sector, and one that we're going to be dealing with. How do we get the ESG, and maybe how do we put, they're equally important, E, S, and G is important, but I think in our context, the S becomes of critical importance. If we look at the market at the moment, a friend called me up not long ago and said, Francois, I'm going to put this banner on my building with 0% escalation. I said, you're redefining the whole South African property market by doing that. He said, no, don't worry, I've only got monthly and annual leases. You know, who cares about escalation? I'll see everybody next year again, and we'll have a discussion. So I thought it was a marketing ploy. Maybe it's not bad. It will sort of redefine what we do. I didn't mean redefine it. But you know what I'm getting at. So we have a property market that is sitting there, which have escalations are pretty much at the inflation rate, and we only hope, unfortunately, there used to be a few rules in the South African property market. 21% IRR, 5-year lease, 12% escalation on net rental, 15% on op costs. And if you didn't understand that, you were told to go home, and when you understood the property market, to come back. Because those were the rules. For some reason, the 21 has always been there and has stayed there. Boardrooms like 21 for some reason. But anyway, we can make it work at 21, or we can make it happen at 21. Anyway, but the others have changed. And I think that that's where the challenge lies in the sector. I'm going to stop because I think otherwise I'm going to start saying what you want to say. We have with us Rob Kane, who is the CEO of Boxwood Properties. For those of you who may not know Rob, just go in town and you'll see a big building with Luma, I think it is, on top, and a lot of interesting things happening on the ground floor. There's, I think, new concepts on retailing, some interesting work that takes place there. And Rob is also very much involved with the city improvement, the Central City Improvement District. So when you see people walking around, the guards there, that is pretty much the CCID. Before I hand over to you, Rob, just a few things with the Urban Real Estate Research Unit. We have an exciting research agenda for the year, which we hope you all participate. And if you have ideas, we are involved in engaged scholarship at this university, and we very much want to resolve the issues in our city, from low-income housing and others. So what are we going to be looking at? We're re-looking, a few years ago, we looked at the whole prop tech environment in South Africa. We picked up 40 companies who were redefining the property sector in all sorts. We're redoing that work. We're looking at, and I think we're now at 80 prop tech companies that are playing the game in the property. And these are people who don't go to courses on real estate courses or MSCs. They are the techies. So we're going to do work there. We're also interested in finding out why certain haven't made it. Can we scale up prop tech in this country, or can't we? So I think that's going to be very much what we're going to look. We are very much involved with our forecasting. Yes, at a certain point as an economist, you have to forecast. You give the number or the date, but you never give both. But I think we're going to be doing some more work that we want to do there. We'll be doing a lot on sustainability, no surprise. We're particularly interested in non-financial reporting. IFRS at the moment, through the IFRS board, ISSB, is putting together a taxonomy on the reporting of sustainability. And I think in the next few years, we will have financial reports where the financial bit will be short and the next 80 pages will be about other things. We are quite interested in the other things. And finally, we will be looking at semigration as well. And we are running some very interesting projects as well. We're doing work with DAG, with the Development Action Group, and others where we're doing some exciting work around land value capture, and we're doing some interesting work on property entrepreneurship. We've got, there's some interesting courses, property entrepreneurship courses, where we last year got involved with, I don't know, how many did we have? 20, 30? 30 young people entering the property sector, the entrepreneurs who are doing the backyard developments, who are marketing on Facebook Marketplace. But there's a lot of work and interesting work and be taking place, which we sometimes ignore in the property market. So URERU will continue to play its role as a bridge between the private and the public sector. And ensure that as a university we can provide a neutral platform for discussions to take place. That's my marketing from URERU. It was longer than 5 minutes. Yeah, thank you. Okay. Rob, the floor is yours.
Thanks, Francois. I've got a lapel mic. Can everybody hear me? Okay. Thanks very much. Thanks, Francois. It's a bit daunting to give an overview on the Cape Town market when I look in the crowd and I can see a lot of people who know more than me about property. But anyway, I think what would be nice is to, maybe I don't talk for so long because I mean that's boring anyway, but we just stimulate a bit of discussion. So Francois, how much time have we got?
Okay, let's just use, just give me this.
I'll just use it. Okay, is that any better? Okay, thanks. I think the first thing is creativity. I think COVID has been a good wake-up call for us, and I must be honest, I think the property industry was quite lazy, and that's been a really good thing. The second thing that COVID has taught us is to collaborate. With our buildings, we're working with all the landlords around us, and I think that's really been a good thing for us and for the others. And then the third thing is just to deal with people's negativity. It's just such a boring narrative. And I think everybody says they should do this, they should do that. We are the they. There is nobody else. If you think Eskom are going to wave a wand, because this morning Cyril said he's going to spend 1.2 trillion. That's a 10-year program. So if you want tenants in your buildings and you want to be able to lease, it's up to us to actually make those changes. So I'm going to give an overview, and some of the areas I'm very conscious that people know an awful lot more than me, so I'll skate quite thinly over that. Then I'll focus on the city centre and just say the lessons that we've learned, and then also just talk about a few case studies where we tried different things and some of them worked, some of them didn't, and I think that could be interesting, and then maybe just look a bit further forward. Cape Town is recovering. We are continually in the press, and it's an attractive destination. And semigration is real. It's already been mentioned twice today. I thought last year, I just thought it was something that the house agents were pushing in order to get sales, but it is real. And it's a problem for us as Boxwood because we hate competition, because there's lots of guys coming in who are very clever from Gauteng. And I do think Cape Town is likely to outperform the rest of the country by quite a margin. For 2023, I am very optimistic, probably annoyingly so for the people in my office, but I think it's real. I think it's going to be a good year for us. Not an easy year, but a good year. So the top half of the slide, pretty much everybody knows that. You know, we're in a slow economy, but we are seeing pockets of excellence, and we're focusing on those. Interest rates, I think we'll get another 75 basis points. We may be lucky if we only get 50. But I think that's, in our mind, we're budgeting for 75 basis points. High inflation, I think it's going to be with us for quite a while. It'll come off slowly. Eskom, we've spoken a bit about it. And COVID, I think there's a real fatigue in business. And I really picked it up late last year. People are very, very tired. And I think we need to just get ourselves through that. But we are seeing opportunities. Some of my colleagues are here today, and last week we wrote our business plan for the next year, and it's ambitious. And we're putting a lot of work into that, and I think we'll be very successful in it. I'll come back to Cape Town being a city of nodes. And then, Francois, what you were saying about the difference between risk and uncertainty. We measure risk very carefully as a business, and we spend a lot of time doing that. And the reason is to remove the uncertainty. And I think that's worked for us. The last point I'd mentioned, don't listen to the negativity or don't absorb it. Okay, this wasn't quite how I thought it would work, but anyway. But the point of this is to do your thinking now. Because when you start a development or you embark on a project, you do 80% of your thinking at the start, and that's where you make your profit. After that, you do 80% of the work, but your profit was made at the start. So if you get that bit at the beginning wrong, it's just like a cheese wedge, and it's very difficult to recover your position. So 80% of your profit is made in that first 20%. Okay, I think that's the end of the cheese. There we go. Commercial trends, we've seen a huge polarity. We bought about 8 buildings in the, thanks so much. We bought about 8 buildings in the city centre, and in the last, during COVID, we decided we were going to upgrade 2.5 of them, and we spent about 70 million. And people were wagging their fingers saying, you guys are going to be in real trouble. But we took our rents from 120 a square metre, and we've just raised them again to 185. And in the same building, we've achieved 200 Rand a square metre. We have competitors who are still signing, actually that's not true, late last year, they were signing quality buildings at 80 Rand a square metre. You can't maintain your buildings at 80 Rand. And we're saying to people, if you want 80 Rand, then go there, because we're not interested. And people are going there, and then they're coming back. So I think that strategy has worked for us. And we've really started filling up our buildings, the ones we've fixed up. The ones we haven't looked after, mainly because of time or we don't quite know what to do with them, we can't even pay tenants to go and look at those. They're not interested. And all those buildings, there's probably 50 that they can choose from. But the buildings that we've focused on and that we've worked on, those are the ones where we're seeing rentals rising and vacancies decreasing. Who would have believed this? When COVID hard lockdown happened, I was walking around our parking in the city, and at that stage it was a very sad figure, but we probably own more parking than anybody else in the city centre. And it was a very lonely place to be. But now our revenue now is higher than 2019. Now who would have believed that? Then flexibility is a feature. And I suppose we spent a lot of time seducing our tenants to come into the buildings. We've worked very hard to get those returns. And then there's been a lot of conversion to residential in the city centre, and I'll come back to that. New build prices are 65,000 a square metre, and there are still sales going on, which to me is quite surprising. But the city centre as a residential node, I think it's about another 12 months, 15 months, and there'll be 9,000 units in the city. that's a good retail opportunity for people. And so that the city centre has come of age in terms of residential. We do think the rising interest rates will curb sales demand. And there's a 3,100 bed student residence happening on the station. That's a lot of mouths to feed in the area. And what we've noticed is that streetscape is increasingly important. And that's where we spent a lot of our money. Hotel trends, I think hotels were really hard hit, but it actually forced them to be more efficient. And one of the hoteliers was telling me their normal break-even is about 62% full. And in COVID, they got it down to about 31%. So they could break even on 31%. So I think COVID's been good for many of us in terms of making us more efficient. The world is ready to travel. The main problem with hoteliers, if you talk to them now, there's not enough flights coming in. But the City Council is working hard on that, and I think you'll see that pick up an awful lot next year. Retail, again, has been tough. There's people who survived are generally the good retailers, and they're doing well. And we're also seeing new entrants come in, and I think that's very encouraging. One problem in the city centre is that desperate landlords have shoved in any tenants. So it's your betting shops, your adult shops, and those guys really degrade everything else. They don't only degrade the ground floor, but they don't degrade what's above. You're not really going to tell somebody the way to your office. They will turn left at the adult shop and then right at the betting shop. Yeah, that's right. You're not going to do that well. The other thing that we've benefited hugely from is collaborating with other landlords, and we've all put up CCTV in the area, additional CCTV, and that's been successful. Industrial trends, probably something I know the least about, to be honest. It seems to have performed well. The vacancy declined, rentals are up. Security becoming increasingly important. People want secure environments. The recession is going to be tough, so I think if you're buying into industrial, and I suppose it applies to anything, you need to do a lot of work on your tenant. Are they going to survive? Because that's quite a key issue. Eskom is more of a problem outside of the city centre. City centre doesn't get load shedding, which is a major plus, particularly if you're in a building with 31 stories. And I think there's an impending land shortage coming with industrial, but guys like Tony will know a lot more than me. And maybe we can discuss whether that market's run too hard, but that's a good discussion. The city centre, just to put it in context, it's only 1.6 square kilometres, but it accounts for about 25% of the Cape's GDP. That's a huge factor. It really is. Got just over 1 million square metres of offices and 270,000 square metres of retail. I mentioned the 9,000 units that are coming on, and an interesting fact is 52%, and I think it's a really important fact, 52% of the tech startups are in Cape Town. And I used to be a broker many years ago, and I used to work on, for every 20 cents for broking I made in Cape Town, I'd make 80 cents in Joburg. So that 80-20 rule has been there. And yet 52% of startups are in Cape Town. And that's a skill base that we can really do well out of. You'll see I mentioned it twice, and I mentioned it further on because I think that's a very important factor. Interesting fact is, and a lot of this is on the SID website, and a report that we produce every year is called State of the Central City Report. I strongly suggest that you get that. It's very valuable, and we can send you copies, printed copies, or it's on the internet. The value of buildings in the city is 44 billion. Last year there were 27 developments at various stages, 5.7 billion rands worth of construction. That's huge. If you drive around the country, the whole country, where else can you see 12, 15 tower cranes? You don't. You won't find those in Sandton or Menlyn or anywhere else. But there they are, they're here. So just going on to Cape Town being a city of nodes, because we essentially have a land shortage and we're hemmed in by the sea, nodes fill up quite quickly. So it's worth doing a lot of work early on to try and figure out where those nodes are and what people are going to want in those areas. I mentioned a couple of case studies and I'll just run through them. This is a development I put together in 1998, and I see a good many of you weren't even born then. So, but I don't know if you know Greenpoint and Somerset Road. When I put the development together, there was just me and the rats in the area. There was just nothing else. And if you look at that recently, those are all the redevelopments that have gone on and developments. It's actually been staggering. And so the rental growth in that area has been enormous. Similarly, in 2013, I bought the Fort Trust building, particularly ugly building. And at that stage, there was nothing going on in that area. And that's more recently what you've seen there. And up there, that right-hand side there is Harbour Arch. I think that's 1.5 billion alone. So there's a lot to be said for trying to sniff out these things. Boxwood, about 3 years ago, we bought some properties. I think we probably own about 1.5 billion in the city and about kind of 7 or 8 buildings. And they're all within about 200 square meters of each other, and we're busy upgrading them all. And that's where we're seeing the rentals go from your 120 up to 185 and higher. And we have collaborated with all those landlords in the area. We know them, we talk to them. If we have a retail tenant that comes to us and we can't accommodate them, we'll phone Quentin or Justin or one of the others and say, well, can you guys find a home for them? And in that way, you upgrade the whole area because you retain those good tenants in your node. And that's the case for more collaboration. This was the old Shell House, and when we bought that, we just couldn't attract people to even come and look at that building. And we spent about 31 million on it, and we think it's really cool space now. And those 9 trees that you see in front, those fully grown fever trees, we planted those. But it just creates a really nice atmosphere for people. And the look we went for was sophisticated but quirky. You can't really see it, and I don't have a pointer, but if you have a look above the foyer, you'll see those monkeys climbing down the lights. So everywhere you look, there's just a little bit more interest than you would normally expect to find in the buildings. The third one is the Salt Market, which is on the ground floor, and Francois mentioned that briefly. With COVID, so many of the retailers went out of business. And to start a restaurant, you probably need 1.5 million at least. So what we did is we did everything. We provided tables, chairs, extraction, countertops, you name it. All the food retailer has to do, the restaurateur, is bring his food and pots and pans, and he can start. But we took our rentals on that floor from probably a 180, which is 180 rand a square meter, and I think we're signing about 380 rand a square meter. So it's a good deal for us, but it also enables entrepreneurs to get going. And in a similar way, we probably got about 17 entrepreneurs going in the middle of COVID. The Felix, which is formerly known as Pickbell, it was a very drab, tiled building. It's got 9 floors of parking and 3 office towers, and we spent a lot of money on that. And I don't know, Cass, what rents are we getting there? Yeah. So we bought that with not much expectation of rental growth, and it's done well for us. 14 Long Street is one we've just started on, and if you have a look there on that corner, it looks like a light beam, and we're about to put a coffee shop in there, and it just creates interest on the street, and that translates into higher rentals above you. The fourth one is, everybody knows Vixie in town, I think. Across the road, there's a city block, and it's bounded by Bree Street, which is very fashionable, Strand, which is very strong, Castle and Loop. And there's 3 buildings on there. And we have put in place plans to probably go up another 13, 15 stories on top of what's there now. So it's a big development, and we can put a lot of parking into that building. But we put that on hold in COVID, because to be honest, we just didn't know what to do. Do you do apartments? Do you do apart hotels, offices? And if I'm honest, we still don't know what to do. It's part of our business plan is try and figure it out this year. So if anybody's got any good ideas, we're very open to hearing them. But I think we'll probably let the market settle down a bit, and then we'll make a decision. In terms of future trends, I think COVID has gone. It's been tough for very many people, but we've just learned to deal with it. And I mean, you're coughing a bit more than the rest of us, so are you. But I think that the really hard times with COVID are over. And I think we just got to get on with it. And I'm just seeing that. I'm just seeing business people are now wanting to get back to work. I think if you'd done this online, I don't know how many people would have bothered coming. It wouldn't have been so interesting. And the conferences we've attended have all been fully subscribed. People want to get out and do business, and they want to do business face to face. Zoom is not going to make it work. The minute we were out of hard lockdown, we insisted that everybody came back into the office. And I think that's been part of our success, is we work as a team, we're very close. And I think that's really worked for us. Immigration we spoke about, that's very true. Again, I come back to the amount of tech startups happening in the city and the need for precinct collaboration. What's really worked for us in the city centre is, I don't think we control it, but we know all of the other landlords and we can work with them to say, guys, don't put in spaza shops. Don't put in your betting shops. And there's, have you had that for a long time? Yeah. Anyway, I think it's quite difficult to spot trends. We know a lot about the city centre, and we put a lot of money into it, and we put a lot of redevelopment money in the last 12 months, and we're very, very confident about that. But quite what in the city, we're not so sure. The offices that we have upgraded have got good interest, and they are gobbling up all our vacancies. And I think residential seems to be stronger than I thought it would be. And I think it's going to be more difficult to spot those trends. And I think we can do a lot better working with each other than all of us just sitting in our corners. You know, most of the guys we collaborate with, we also compete with them. We compete with them on acquisitions, on tenants, everything. But that doesn't mean we can't swap ideas. And if we've got a problem, we walk across to one of the other landlords and say, well, what do you think? And they know that they're in the area. It's better that our market is actually successful, because that uplifts everybody. And their prospective tenants come in and they think, oh, there's a market there with 11 retailers and a bar. This is a good place to be. So there's a lot more to be gained from working together. Francois, I think that's all I want to say, really. I'd really rather we just stimulated debate.
Thank you very much, Rob. Let me take the other microphone. What I'd like to do is, here we had a presentation, and of course, and we looked very much at the inner city. Many of you are, we've got a few nodes in Cape Town at the moment. Claremont, CBD, Belleville, and I suppose if we stay in the metropolitan area, we've got Somerset West as becoming very critical nodes in our markets. And it'll be interesting to see the position of the CBD. Just a question which I have, and we are seeing an increasing amount of residential entering. Now, an office node is not a residential node. You need schools, you need other amenities. And I've heard people argue, well, if you've got your flat there and you want to go to a supermarket, there actually aren't that many supermarkets in the CBD. You know, did you think that the opportunities that sit there?
Yeah, I think so. I think things like 60/60 checkers, that is revolutionary. So why would you want to go and do a massive shop?
Okay.
So if you don't need that, then you actually really don't need a car. And if you've got Uber, and I think the changing face of retail, and we own a small shopping centre in the city, and we're looking at that really closely, is what is it going to look like in 5 years' time? And I think it's going to be a lot more boutique shops. If you look in London, all the large shopping centres and the sort of pick and pay type places are all decentralised. But what you get is things like the Oranjezich market. When you go there, you get really cool stuff. And the other thing is your ticket price of your offering. You know, you want some high end, but you also want to be able to buy a meal for 40 Rand, not for 80 Rand. And I think that change will come.
Well, we were just looking at stats in our class this morning. I don't want to put one of my MSc students on the spot here, but would somebody like to suggest how many square meters of vacant office space we have in this country at the moment? Yes, you'll get extra marks for this. Just over 3 million. 3.5 million square meters of office floating in the South African property market at the moment. Now, the question is, what do we do? Some have argued this is the biggest opportunity for the residential sector, because what we're going to do is convert the B and C grade into residential. Do you think we're at prices at the moment in the Cape Town, and I'm taking the CBD at the moment, we could go and look at Claremont and other nodes, where we can still do conversions? Are prices low enough? I mean, I remember in Joburg it dropped to 1,000 Rands a square meter. Yes, then you can go and build your 200,000 Rand flat on the back, but I don't think we're at 1,000 Rands a square meter here. So what does the economics look like?
You can't really buy a building in the city centre for less than about 9,000 a square metre.
Okay.
Because we had some Joburg developers come in and they were storming around and they were saying, we're going to buy at 3,000. And we said, you can do that in Sunning Hill, and you can do that in Randburg, and you can do that in Rivonia, but you're not going to do it in the city centre. It's just not going to happen. But that's what forces the price of the residential fit-outs so high, and it also forces the size of the units to shrink. We're a little bit concerned about the size of those units. Can somebody functionally live in 17 square meters? And for that, you need really tight control. So
is that 17 square meters and you share a kitchen? Because, I mean, that's the new way of doing it. You got this kitchen that sits in the middle, and you share a kitchen, but I suppose your own front door is worth a lot of money.
Typically, everything is squeezed into your 17 square meters,
Everything.
but there's no real expectation that there's going to be a lot of cooking in there. But the worry for us, if the body corporates are not tightly controlled, and it's something that the CID is working on, and we're working on 1,000 things, is if those body corps are not tightly controlled, they can deteriorate very, very quickly.
So maybe we're going to move from 40 by 40 by 40 to 20 by 20 by 20. No, but it may well be what we come down. Let's look at the industrial sector. And I would like to hear the views. I've been told to offer us anything. I don't care if it's part of Ireland. I don't care if it's old. I'm looking for logistics, and we're short on logistics. Anybody in the logistics sector would like to share a view on the logistics sector in the Cape Town property market? No? Yes? Let me give you the mic. And we're hearing now that storage is going to do a sort of Airbnb on us, which I think is in news this week. But anyway, let's...
Francois, you say logistics, but logistics is actually a very broad sector on its own.
Okay.
And I think people need to understand that. Just like saying residential as a sector, there are a myriad of different types of warehouses, logistics centers. And also now that logistics has become a bit of a buzzword, a lot of people are jumping on the bandwagon and calling their old, low, 50-year-old asbestos roof warehouses last mile logistics. Okay. So I think brand new, decent logistics is a great sector to be in. It's performed very well. I'm not sure about the older buildings, but Cape Town obviously has a land problem now. There is, certainly from what I'm aware of, there's no large tracts of industrial land on the horizon to be released.
Can I just ask you one question about that? And then okay, how far can we go? That's always before we're too far.
Well,
And
I'll give you the academic answer. I think it's to the edge of the city boundary.
Because there's no infrastructure after that.
So, which I believe on the N1 is just beyond Kraaifontein as we sit.
Okay.
Where Value Logistics is, I think that's close to where the city boundary is.
Yeah, right.
But I'm not in town planning, and I don't know the exact boundaries. But there's if one looks in the last few years, there have been a huge number of 50,000+ square meter warehouses built and planned for Cape Town. You've got DSV, you've got the ShopRite building, you've got the I call it Walmart, but it's effectively Massmart building. And,
Is that the R300? Or,
yes,
yeah.
that's on the R300. Truworths' new facility that is in the ground at the airport. And once the current industrially zoned land is taken up, there are no large nodes that are currently planned, and that's going to change the face of the industrial market. I think things are going to turn and look inwards again, and we're gonna have a whole range of what everyone calls brownfields industrial development. So
interesting. Yeah.
There's cycles and things, but logistics is very strong. We get calls daily from people, especially KZN, moving to Cape Town, wanting buildings here.
Good industrial logistics. What sort of rentals are we looking at in Cape Town? Would you like?
Probably, when you say good.
Well, okay, well located.
I mean,
high.
I would say something that's big, a big box. You probably can't build for less than 100 Rand net a square meter now.
Right, okay.
So it will be upwards of that. Also, people have got to take into consideration volumetrics, cubic meters.
Rather than square.
So, and that brings a whole new range of complexity.
Yes.
So it's an exciting sector, but I do think one's got to follow the new trends, you know, what the take-a-lots are doing. Those type of buildings is where the main big demand is. And I think cognizance must be taken with the lack of new industrial land, because that's going to affect us over the next 5 to 10 years.
Thank you very much. Would anyone like to comment on data centers, which is the talk at the moment, or anybody involved? Because I think your point also is we segment data centers. It's no longer data centers. It's closer, though, in the bigger ones, and the sort of mega data centers.
Francois, can I just say something to what Tony was saying? Because I think, Tony, part of what you were saying is watch out for obsolescence. But the same is happening in the commercial market. Right. You know, you talk about 3 million square meters vacant. If you go and look at most of that 3 million, it's revolting space.
But it is the opportunity for the residential, you could argue.
Yeah, but that is the opportunity. I think it's functionally obsolete.
Obsolete, yeah.
But if you segment the market and you look at your quality offerings, your vacancies are much, much less.
No, look, it's the market, and it happens. And I suppose the big difference is that in Gauteng, you keep on moving. You go from Rosebank to Sandton to Waterfall, and you keep on going. Here, we've got a land issue. We have a very different scenario, I think, than you would have in the Joburg scenario. Any questions? Would anyone like to ask anything, queries on the market? Anything? Yes? Let's get a microphone. I'm going to...
There we go. I'll do it.
So I just wanted to know, you were referring to the 9,000 units that's being added to the CBD, and as an Atlantic Seaboard developer working for a company that's just developing on that side, we obviously are looking at that a lot and considering it as well. But in terms of sales there, do you have any stats on how those 9,000 units are actually performing in terms of selling? Because we've seen it go up, and we are looking at it intensely, but we're not so sure that everyone wants to live in the CBD.
Sure. I think that's a good point. Just to clarify, it's a total of 9,000. It's not 9,000 new units. We also share that concern about those selling prices, whether they're sustainable. But they do seem to be being achieved. If you'd taken a bet with me 8 months ago, I would have said those sales would never have been achieved. But they are being achieved. And I think in the last 3 years, bar the last years, the previous years before that, the CID really struggled in the city to keep a control of cleanliness and safety and that sort of thing. And the new mayor really has done incredibly well with that. And we meet with the mayor monthly, and it's a very tight agenda, and they've made huge strides. So I think the decline that you saw is being turned around. And it's a staggering amount of work. I mean, the CID now employs about 700 people, indirectly, but it's a lot of people. And we have large security contracts, which, to be honest, we're struggling with at the moment, and other contracts as well. So it's a 300 staff, security staff, 24 hours a day, all of them with body-worn cameras, cleaners 24 hours a day, social workers 24 hours. There's an awful lot going on. So I think people are going to see that improvement. I mean, we see it already on the street, but we're kind of picky, I suppose, and we're very conscious of what's going on. That's been a concern, and I think that is turning. But as to where it's going, whether those prices are sustainable, I don't know. I really don't. And that matrix development we've got on Bree Street, we just honestly don't know what to do with that. You know, if we were confident we get 65 a square metre, I'm telling you, we'd be out there tomorrow. Thank you.
Maybe the one thing I didn't mention is that we are also in a fairly big project at the moment with the CCID, where we are looking at the nighttime economy of Cape Town. I think we have an economy which people forget, where we have a lot of... And the nighttime economy is not just the jaw. My partner just said to me, this is an excuse to go out at night and do research, which is not really the case. You'd be amazed, and Rob, the number of call centers that are operating in the CBD. In fact, there was something in the newspaper this week about it. The number of people who at 11 o'clock at night, there's a major switch in the call centers in the center of town. And, you know, getting our nighttime economy going is going to be important. And some work we're doing at the moment is looking at the possibility. I don't know whether it will happen here, but certainly Amsterdam has a nighttime mayor now who runs the city after 6 o'clock for the whole night. So the city carries on in its function. And I think we're getting to a point also in the CBD, where for property investors, it's maybe can we sweat the assets for more hours, but I think it also offers some interesting opportunities how we manage. And one always has to remember, mixed use. We always say we're going to do mixed use development. For many South African, mixed use development is our inner cities. That's the mixed use. It doesn't have to be created, and I think that's something. So I think that there's some interesting work that we can do there. Tim, can I ask you something there maybe? We've been talking about co-working here a bit. You are also with Agility, you're going into that space. Any view on Cape Town, co-working and that sort of space, the changing market?
It's a bit of a passion, so I'll try not to go on about it too long. I think one of the things we are going to see is, I said, previously landlords used to sell space. It's a GLA, and that's the rate per square meter, etc. I think property as a service is something that is going to come more to the fore. I think it's competition. I think what Rob has done downstairs is a good example. Had a big retail space, you could have let it to one tenant for 100 Rand. You've let it to probably 17 tenants at 300 Rand. And what are you doing? You're offering a very big, diverse offering for those people downstairs, which supports your 180 bucks just upstairs. So, I mean, that's the model. And 17 tenants is a lot harder to handle than one big one. But you're doing it for a reason. And you're doing it because of the enhanced value and what's being created. So I think when we look at just normal conventional offices, we're going to find an environment, and Work Agility is about what additional services are we giving. It's more a hotel experience. How did I feel coming to work? And so it relates to training of staff, ease of parking. Was there music playing in the foyer when I walked in? Was I able to get coffee? Was it easy for my staff to be at work? And what are those other attributes that need to be there? And so,
will property companies start looking more like hotel groups going forward than
somewhere in the middle. But this is a lot of hard work. 17 tenants is a lot of work. It's 17 leases, 17 negotiations, and it takes as much time as doing that one lease. So I don't think it'll ever get to that level of intensity at the end of the day. There's a reason why you have collaborative workspace in the market. Those are a lot smaller, a lot more intense, and leave it to those people because they do a good job. So I think we're going to be somewhere in the middle. There'll always be the conventional lease for the large tenant who wants what he wants. But I think that service element, as part of the competition, is what's going to be coming through because it needs to.
And you've got someone next to you who used to be in the hotel industry, who knows the industry very, very well. Was there a question? Gary.
Hi, mine is not as complex as some of these questions. I was reading the Rhoda report recently, and it seems like in Q4, the Cape Town CBD seems to have really outperformed. I was like looking at mean office rentals, trying to figure out like where the market's moving. And in some like grade B space, we're talking about 15 to 20%. In grade A and A+, we're talking about 6, 7, 8, 9% in one quarter. So I was a little bit surprised, and I wasn't sure if that was the overzealous brokers going into Christmas or if it's representative of reality. And I guess with your experience in the inner city, do you think that is the case now on the ground? I assume we would see a little bit of a leveling off of that over a period of time, off a low base. But I was just trying to get a sense of whether you think that is realistic right now or not. Thanks.
Yeah, sure.
Well, I suppose it's an interesting question, and the natural vacancy rate in the office market is about 8% in South Africa. And the argument is that as long as you've got a vacancy above 8%, don't expect rentals to increase in real terms. But we're sitting at 12, I think Cape Town at 12, is it 15?
But it so kind of feeds off what Tim was saying in terms of service culture and what Francois was saying in terms of running your buildings like hotels. And you just need to really segment the market. You can say there's 3 million square meters of vacant office space. It's an appalling investment. Or you can look at the buildings and say, if we upgrade these buildings, tenants will love these buildings. And that's what we've done. And the market, I don't know, we're probably breaking even on it, even at 380 Rand a square metre, we're probably not making money. But when you want a tenant like Luno in your building, and they walk in and their staff can buy a Seattle coffee right there, and then they can walk at lunchtime and they can go after hours and have a beer. And then they go in and it's all fingerprint access and there's CCTV everywhere. You create a different environment. And that's what tenants want. The 3 million square meters that you're looking at that's vacant, you need to go into that.
No.
Because in COVID, we went into about 25 buildings in the city. And I promise you, within half an hour, you actually don't know which building you're in. Because they've got those horrible beige tiles, the little carpets, and all the foyers are identical, and it's appalling lighting. And you do that and you realize why people don't want to come back to work. But if you offer them really exciting space and a cool streetscape that's got bollards in it and art, we've probably spent 350,000 on art in the last 12 months in the city. Do you know that Spider-Man? That's ours. 14-story, what do you call it, lighthouse? That's ours. And
Well,
nobody paid us for that, so, but it adds to the street.
final question. Over the years, there's been a lot of talk about Belleville. There's been a lot of talk saying we don't have one CBD, we actually have 2 CBDs. We've got, I suppose, like I say, if we come back to our nodes, what have we got? In the central, people call it township, I tend to call it the southern suburb, northern suburb, and the central suburbs. Let's give the area the respect that it has. It's a suburb. And we got Philippi as a node, we have Belleville as a node, we have the CBD, we have Claremont, I suppose Somerset West. Where do you, have you got any views offhand with how you think this is going to play itself out?
I think it's all valuable. I think if you look at Century City and what they've done more recently, it's actually beautiful space. You know where Absa are and Tiger's Milk?
Sure.
That's a place you'd really want to work.
Mm-hmm.
And if you look at what the V&A are doing, some time ago, to be honest, it wasn't particularly exciting. But if you go there now, that silo precinct, they put in a lot of effort into the street. And we've done a lot with collaboration. As a SID, we went to them. And at one stage, it was quite adversarial. And we said, well, this isn't working for either of us. Why don't we work and just make it one long precinct? Because Europeans walk everywhere.
And
When
Belleville?
they're tourists.
Do you think we have 2 CBDs?
I think we have a lot of CBDs. And I think it's healthy.
Right.
I think, yeah, Belleville, it's pretty well and it's functioning. And there's some really nice pockets there. But within each of them, except for the V&A, there's a competitive offering wherever you are in the market.
Yeah. Okay.
If you're more price conscious, there's space for you. If you want P-grade, it's there.
As they always say, there's something for everyone in the property market. There's a niche that's happened now. We just saw some young entrepreneurs who've bought some offices and turned them into residential, fairly successful. The pricing is, of course, what we need to unleash is the township property market. And I think that's going to be so important in what we're doing. I think we're going to wrap up. Any other questions? Anything anybody would like to raise at in the market? So I think we are generally coming. Where? Oh, that's on your side.
Right, here you go.
Thanks. Rob, I just wanted to ask you, you're talking about the sustainability of the central city, and you're talking about investing in your buildings. I just wanted to ask about, and you were talking a little bit more about investing in public art. And obviously those are improvements to your own buildings. Now, what is the opportunity and the willingness of developers to work with the city to invest in public space that's not actually owned by them? Because, for example, you've got squares like Tybalt Square Church Square. You know, these are squares that, if you look at the waterfront at Battery Park, I mean, to make a central city that is sustainable, you have to invest in your amenities, because people don't have gardens and backyard spaces and all that sort of thing. So how do you invest in those outdoor spaces to make them exciting and safe if you're not going to directly get the return on your investment?
Well, Rob, do you want to start? I mean, I've got one or two views on this, but
Well, you go first.
shall I go first? I think we're in a changing environment, and let's not underestimate the pressure that is coming through ESG and sustainability. I think investors, financiers, and others are putting pressure on the game at the moment. I think it will be very difficult for a property company in the years to come not to respond. And I think where it becomes interesting, and it's work we're doing as well, often when we talk of green buildings, we forget the embodied energy. There are calculations that suggest that on a new building, it will take you 30 years just to recoup with your efficiencies the embodied energy in a building. All the buildings, existing buildings, first of all, have a sustainability role to play. If we're going to get to 1.5 degrees by 2050, it's going to be the existing buildings that are going to do it. What we add as stock every year to the existing stock of properties is so small that that's not going to be the answer. Now, why I'm saying that is that sustainability has got its broader role. And I think we're going to find ourselves in an environment where actually the private sector is going to arrive at the public and say, we want to do something with the parks. We actually want to. And I think the narrative could well start changing to the ones that we had in the past. We all know that there is plenty of funding on sustainability finance, green bonds, and so forth. So I think what you're touching on is a very important point. And I think that if we're going to play the S of ESG, the S is your hood. You can have a building and you say the rest of the hood doesn't concern me. I'm going to plonk my shopping center down and I'm going to put a big fence around it and let the hawkers on the other side. Yes, I suppose there are ways of playing this, but there's also a way of playing your hood. And I think there may well be something around, I don't know how you're dealing with it.
Yeah, it's a really, I mean, you actually raised so many issues, but the streetscape, I think it's probably, I don't know, Gus, we haven't done the numbers, but it's probably added R3 a square meter to our rentals on a 26,000 square meter, 31-story building. So was it worth it? Because we did all the paving there. It's not our land, it's city land. And the trees that we lifted out there, the SID, we lifted them out and the SID went and planted them somewhere else, and we planted fully grown fever trees. So those trees are expensive, 70,000 each. But when your tenant steps out of his car to view your building, it's a beautiful building. Everything there speaks about quality. Whereas if you're only going to manage from your front door inwards, you've lost the race. Because the V&A and Century City are very capable competitors. And then the environmental, I think, is so important. I've been irritated for many years, so you probably never raise this. But people build a green building and they say this is 5 or 6 star. I think that's absolute rubbish. If you look at all the concrete and reinforcing steel and cement is one of the highest users of energy in its production. And reinforcing steel, quarrying, that whole building is new. We should be refurbishing existing buildings. And it's quite easy to do. You just need to be a bit more creative.
Actually, there's some scientific work that says that if you take an existing building and you improve it by about 20% in its energy, you are at the same point as a modern green building. In other words, because the embodied energy is already in there. It's a bit like somebody from Heritage who came by and they wanted to have a green certificate. No, because you're an old building. Well, my argument went the other way. But anyway, I think it's pretty much what we're saying. I think we're going to wrap up. Rob, thank you very, very much for the presentation. I think it really relates that we are in an environment with enormous opportunities in Cape Town. I think we need to remember that the built environment starts from the shack to the biggest buildings in town and everything in between. And I think that if we fail at any point, as I often say, in the built environment, you start with planning, service, build, and occupy. If we don't get that right in South Africa, the property market will deliver in exactly the opposite direction. You start by occupying, you then build, you then ask for service delivery, and the town planner arrives at the end. And I think we have a choice that we either create a property market which can deliver across, because the property market does deliver in one way or the other, and I think we have an important role to play in which of the directions we want the property market. And I think when we say it's a success and the city we can be proud of, it's going to be prideful for all. And I think that's going to be our challenge, that the semigration will not be the semigration of our P-grade office. It will be semigration for many others in the country. And if we can get that right, I think we can carry on doing very, very well. We've got a changing property market. As the point was made, maybe we're not selling GLA anymore. It's a bit like what I often say when I'm in a hotel for 2 nights. I don't say to myself, how many square meters am I renting tonight? I don't care. It has to look about the same, the right size. But don't ask me how many square meters I'm buying into a service. And I think that's in the years to come. The rental will be part of the income, but I think the rest is going to be such an important role. And I think that makes the property market very exciting in the way it moves. And those of you who really want to get it, you can go and buy your property in the metaverse, where there's a whole property market playing itself out as well. It leaves me to also thank our sponsors. Been online, thank you very much. Karen, we didn't see you, but thank you very much for the sponsorship. Thank you for the sponsorship. And also thank you very much to our HOD, who's also sponsoring this evening, because we brought all our MSc students, and we've used this as a MSc welcoming function as well. So for all your MSc students, we're not going to say MSc trainee, but talk to the people here. There are a lot of people here who are very deep into the property market. And I always get this phone call, I'm looking for someone, and we're happy to match, but we need to know about it. And there's still something we're getting wrong in this game. We're not matching people who want to be in the property market with those who are looking. And I don't know, I'm not going to start here a placing agency. I'm not that far from retirement, but not now. Thank you very much. We've got some drinks upstairs. I think we've got enough. Like I said, we had 400, but we didn't cater for 400. So go.